Good morning. Welcome to the program. A glance at markets across assets right now, and you know what? It didn't last very long, the sell-off, and I can tell you that because you look at U.S. futures steadying. VIX futures in the U.S. are also coming, signaling an ever so reversal of yesterday's price action. What is quite noteworthy, though, is still when you have the Nikkei VIX index there, as you can see, up a point. We're down 0.6% on the global on the regional benchmark, which shouldn't come as any surprise, given, of course, the downdraft we did see in global equities. We'll see how China opens up, of course, and we'll get you a sense of futures. Change the page, please, in about a minute or two. Gold and silver very much in focus still, given just the uncertainty out there, and almost in every scenario looks to be bullish for gold. That's according to a lot of gold bulls out there. Dollar is steady, if not slightly weaker right now. Dollar yen, as you can see, is not really doing anything, and certainly the expression of what's taking place in Japan has really been largely divorced from FX markets. It's really shown up more in the bond markets. Coming up on your screens, 10 and 30 U.S., 30 and 40 in Japan, and we are stronger just about across the board. We're stronger by about 10 basis points in the Japanese 40-year yield. The Golden Dragon Index overnight, PDD, of course, was in focus 7 days in a row of declines, 2% to the downside. Other stocks to watch on your screens, 1.5% to the downside on the benchmark overnight, which takes us well into the futures today. And the 50-day moving average after 4 days of losses is very much the line in the sand to watch. We had cut through the 100-day, and we're looking at maybe a bounce. We'll see if that happens today. In terms of bond markets in China, there's an auction today. We're looking at 2032 bonds. In that amount, yields on your screens, 1.83%.
Yeah, you got to wonder how, you mentioned the steadiness that we're seeing in JGB markets here right now. You got to wonder how long that's going to last here, given the fact that, yes, you heard from the finance minister in Davos really telling investors, calm down. We'll figure this out. But then again, there's still a lot of questions about the policy moving ahead. How are they going to plug that gap from cutting food sales tax, and whether the BOJ is going to have to step into this bond market here eventually, too?
Yeah, I mean, there's so many factors at play. It's hard to sort of disentangle what is what, right? Is it the piping of the market? Is it the economic fundamentals? Yeah. You do have, of course, core inflation somewhat there in Japan. You do have, of course, the prospect of more rate hikes. Scott Bessent, interesting enough, of course, I believe he said he spoke with Katayama
last week.
Yeah, to talk about, well, they got to say something to calm the markets. And of course, our piece actually highlights the fact that, Scott Bessent was actually a hedge fund, comes from the hedge fund world, and he called this it was a Six Sigma move in the JGB market. So it's nothing, it's very unusual to see that. It's showed up, of course, in treasury markets, which have, to some extent, calmed down ever so slightly today. But yes, I mean, it's still a story we need to unpack, and whether or not there is something beyond the price moves we need to consider out of Japan.
And will it be more than just verbal intervention at this point? But we certainly heard that voice of calm from the Japan finance minister yesterday, Sasuke Katayama, who defended the government's fiscal policies as responsible and sustainable.
I don't have any concerns about the absorption of JGBs going forward because we have a well-thought-out plan for JGB issuances. I believe the Ministry of Finance of Japan is perhaps the best Ministry of Finance in the world in terms of our close communication and careful communications with the market participants.
Investors obviously disagree with the perception that you hold right now. They say that JGBs are not the ones to buy at this point in time. There are huge concerns about your finances. How do you respond to that when they say that perhaps Japan's bond market is a canary in a coal mine?
I think those concerns are misplaced. We put a lot of importance on sustainability of our public finance. If you look at the draft budget for all this year, for the first time in 28 years, we will be achieving a primary balance surplus. If you look at our economic policies, through our economic policies, the plan is to expand the size of the Japanese economy. We have already seen an increase of tax revenue by 84 trillion yen, and we are to spend without additional borrowings. And as if you could look at our dependency on JGBs, the public debt dependency is at a 30-year low. As the Minister of Finance, I am not going to ignore the concerns in the market. The Prime Minister has been talking for the past couple days about an election to ask for the confidence of the public. She has talked about a possible plan for reducing the consumption tax rate. I know that is one of the reasons why the market has become rather nervous. But she has said that Japan is not going to depend on issuance of deficit-covering bonds. Since October of last year, we have taken a very responsible approach to public finance, talking about responsible, sustainable, and proactive fiscal policies. We are not taking expansionary fiscal policies. And this is demonstrated by some of the numbers that we see. So I asked the market participants to calm down.
The timing of that conversation there, Satsuki Katayama, the finance minister of Japan, speaking with their colleague Haslinda, of course, at Davos. Joining us now from Tokyo to talk us through the implications and really how this is viewed on the ground in Japan. Jesper Koll, expert director at Monex Group. Jesper, good morning from Hong Kong. Thank you for joining us on relatively short notice. What's your prognosis? Is the bond market front-running the BOJ slightly too much, or is something else at work here?
No, look, what's at work here is that Japan has forgotten what is normal. And, the reality is that, yes, the Japanese economy is normal. After basically 20, 30 years of zero interest rates, you now have, an economy that is recovering, steady wage gains, nominal GDP growth of 4 to 5%. And the reality is that the normal neutral rate in Japan is not 0.75%. If you look at something like the Taylor rule, you find that the growth potential of Japan is about 1%, inflation target is about 2%, so the neutral policy rate should be between 2.5% and 3%, and the Japanese bond market is pricing exactly for this normalization. This is not a crisis, this is going back to business as usual.
Business as usual, but they're still talking about, something like cutting food sales tax, right? I mean, they're saying that could cost the government of up to $32 billion. How do you think the government's going to have to plug this gap?
No, Yvonne, and you're absolutely right. I mean, there's obviously an election. Obviously, Prime Minister Takaichi is going to have to buy some votes, because the Japanese people are angry about the loss of their purchasing power. Because, yes, the Bank of Japan, the policymakers in general, are behind the curve. Again, the Japanese economy is much, much more normal, and fixed income markets are beginning to price for exactly that. It's very interesting that you see, the winners from the normalization of Japanese interest rates are actually the Japanese people, because for the first time in one generation, deposit rates are starting to increase, so that asset income is actually starting to go up. So there's losers in the bond markets, of course there are, but there is winners, and that winner is Mr. and Mrs. Watanabe.
Jesper, the direction of travel is certainly to the upside, and it's a good thing when you point it out that way. It's a good thing that Japan now has an interest rate, right? Although you are getting aberrations like the one yesterday, which was nothing but normal when you look at the size of a 25 basis point move on, say, the Japanese 30 or 40 year. And I wonder, short term, do you think we need to be considering the possibility of some sort of intervention, whether that's some supply tweaks from the Ministry of Finance or some temporary purchases from the BOJ just to calm the markets down, Jesper?
No, I don't think so. I think that, if you've got intervention, as a speculator, all that does, it's going to fuel my, ambitions, because if the public sector, if the Bank of Japan, for example, supplies artificial intelligence, it's just going to be a one-off. Again, the value in JGBs for a 10-year bond, it's not 2%. The value comes in closer to 3.5%, maybe even 4%. And that's where the pricing has to happen. No amount of short-term intervention is going to prevent you from from stopping that path that goes towards 3.5% to 4% yields.
Okay, 3.5%, 4%. Do you think that's going to be the threshold then for Japanese investors to really kind of repatriate some of their holdings offshore? I mean, what does this mean for the global bond markets, right? Are we likely to see trouble for treasuries and the rest of global sovereigns moving forward?
It's very interesting. That's obviously a common narrative, that is out there. And you're absolutely right, Yvonne. The key question is, when is the GPIF the world's largest pension fund, the Japanese Public Pension Fund, when are they going to increase their allocation into JGBs? Is it at 3% on the 10-year bond? Is it at 3.5% on the 10-year bond? That's going to be the big signal, because you need the Japanese buying their own debt market, which right now they are not, because they know that the Japanese economy is normal, wages are growing 4.5–5%, nominal GDP is growing 4 to 5%. As a result of that, a 10-year bond should not be yielding less than the nominal growth in the national economy.
Jesper, one of the big buyers, I wouldn't even call it big buy, one of the big buyers, the biggest buyer of the JGB market was the BOJ, and they have, of course, stepped back, right, as they normalize policy. The reason I bring the BOJ up because there's a rate decision that just happens to be scheduled for late this week. Is there any specific guidance you think the markets should be paying attention to out of the press briefing on Friday?
I think that the key question is, the inflation expectation by the policy board needs to be adjusted upwards. You talked earlier about fiscal policy. Now with the election, very likely we're going to get a cut to zero in the consumption tax for food. Now what that actually does, it frees up purchasing power for other consumer items, whether they're services, whether they're goods. So as a result of that, it's actually not going to bring down inflation outside of food. Quite the opposite. Demand for food items is going to be going up. So the bottom line is, yes, the Bank of Japan needs to get its act together, needs to guide expectation that, yes, 3 or 4 or 5 rate hikes over the next year and a half are indeed the responsible thing to do to normalize the economy. The Bank of Japan is behind the curve.
Jesper, final question. Since you mentioned elections, that's also coming up in, let's call it 3 weeks. Which way do you think that bet's going to go?
It's very interesting. I think that Takaichi is going to win a landslide victory, possibly even going so far as a supermajority. And the reason is not economic policy. The reason is that she's just got incredible charisma. She is a self-made, woman who, against all the odds, made it to the very top. And there is young generation Japanese in particular, but also old Japanese generation who absolutely admire the fact that she's broken through the glass ceiling, that she's not an apparatchik, that she's not an entitled person, but she's a self-made winner. And that's what, in my personal opinion, is going to generate a landslide victory for the LDP.
Okay, has that been priced in, you think, in markets, whether it's dollar yen? There's talk of, if we hit back to 160, that, we might see some intervention. I mean, where to next when it comes to direction of travel for yen?
Look, my view is that, dollar yen is headed towards 175, 180. And the reason is that not just here in Japan, but more importantly in the United States of America, you have got a U.S. economy that is very, very strong, where, the Federal Reserve is unlikely to cut interest rates. And as a result of that, I think that the dollar is the way to go for the next 6 to 9 months.
Jesper, we got to leave it there, but thank you so much. Jesper Koll, the expert director at Monex Group, joining us from Tokyo. We are still waiting that you're going to be fixed. Let me see.
I'm looking too.
This is going to be a big one, right?
There we go.
All right. So they're holding the line still at 7. In fact, it is actually weaker than yesterday's fixture, 70014. We were thinking maybe we would see something that's sub 7. Not today, once again. But there you go. You do see a bit of a reversal in dollar China here this morning on the weaker fix here today. We're coming down to the open up trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Without collective governance, cooperation gives way to relentless competition. Competition from the United States of America through trade agreements that undermine our export interests, demand maximum concessions, and openly aim to weaken and subordinate Europe, combined with an endless accumulation of new tariffs that are fundamentally unacceptable, even more so when they are used as leverage against territorial sovereignty.
I doubt it. Look, they need that agreement very badly with us. They really do. They fought very hard to get it. So I doubt that, but we'll see what happens. We have a lot of meetings scheduled on Greenland.
President Trump there says that he is confident the EU will stick by their trade deal, even as he imposes, of course, new tariffs in his quest to take control of Greenland, as France, of course, in the sunglasses at that too, blasting his strategy.
We can do that. We can do that now. He set the president. But yeah, no, it's very cool.
We could talk about it later. We're running out of time. Okay, let's bring in our team to talk us through the highlights of Davos so far as we make our way into another day there. Of course, Jill Deeses is with us here, our news desk managing editor. Okay, what stood out to you apart from the sunnies?
I mean, I think at this point, David, it's just really extraordinary to watch how unsettling this entire week has, really kicked off here. I mean, you've got Donald Trump continuing, and maybe it's not really a surprise after all, but continuing to upend, decades of, international policy here. Obviously, has really kind of, created this incredible environment of concern among, the U.S.'s European allies here over Greenland in particular. Yeah. I think what's really interesting to watch is, sort of the difference between Trump, who's obviously, I mean, this is very classic Trump, just kind of going in all bluster, trying to make demands.
And I have to mention this. They've taken over this 19th century church in Davos with this big banner, as we're showing right now, House of God. I think it's just kind of very symbolic of, I guess, the power play that they're trying to really kind of bring to Davos.
Exactly. And I mean, look, Trump, honestly has tons of reasons to be emboldened, right? Like a lot of his, tariff policies last year, kind of worked. He got, almost every, U.S. ally to kind of come to the table and negotiate over, creating these, fairly, substantially higher tariffs than existed prior to last year. He had, this at this point, seemingly successful operation in Venezuela to remove Nicolas Maduro from power. And he's also, staring down a Europe at this point that has a lot of vulnerabilities over Ukraine, some other issues. It's not entirely clear that all of the European leaders ultimately agree with each other, can come to some kind of a consensus on how exactly they retaliate against Trump. That's, really the question here is if he goes ahead with these February 1 tariffs, trying to push everybody to the table over Greenland negotiations, there's a possibility that Europe could come in, on February 7th with some retaliatory efforts, but Trump appears to be calling their bluff.
Okay, the speech later on today. I mean, it's supposed to be a speech about affordability, but I'm guessing this whole Greenland issue is going to kind of sneak in. Do you think he's going to strike a tone that's going to ease the tensions right now, or actually escalate further?
I mean, at this point, it's, obviously, I don't want to get into the business of predicting anything Donald Trump is going to do, because you never really know exactly how things are going to go down. I would say, though, that obviously Trump very famously likes to go off script, so it's kind of whatever he's feeling in the moment. But again, I do think that it's important to point to the fact that, he does seem to be emboldened over this. It's also really interesting to watch kind of how a lot of his key advisors sort of try to balance things here. So while you've got, sort of this potential threat of military intervention rising up to the point where the Prime Minister of Greenland is warning people to, that could be even as highly unlikely as it is something to worry about here. You've got people like Scott Bessent saying basically everybody take a breath. You've got the trade representative Jameson Greer trying to seemingly imply that maybe there's some economic negotiations at play, and that whatever ends up happening with Greenland is ultimately going to be some kind of a cautious, measured sort of longer term negotiation. But obviously when it comes to Trump, he's got his own style, his own flair of doing things, and I don't really think he's got a whole lot of reason to suspect that may go wrong.
Yeah, there's a lot of talk about whether the European investors are going to dump, their U.S. treasuries and the like. I think Bessent had a lot to say about that, saying, basically that's nonsense.
Yeah, except if you ask the Danish pension fund specifically, of course, which is a separate conversation there.
That's that they might actually exit U.S. treasuries.
Yeah, from a credit risk perspective is what they're fanning there for now, of course. Jill, thank you. Jill Deeses there, of course, on the latest of Davos. And, of course, separate there, on script, very predictable, is the Chinese side portraying itself as the advocate of free trade and multilateralism. Holy Feng, the vice premier, has been making that specific case in Davos.
Multilateralism is the right way to keep the international order stable and promote humanity's development and progress. The rules must apply equally to everyone. A handful of countries should not enjoy privileges based on their strengths, and the world must not return to the law of the jungle where the strong bully the weak. Every country is entitled to defend its legitimate rights and interests.
Yep, we'll have more, of course, on the Chinese side of things. They are the world's factory. They also want to be the world's market. Futures are going into the open today. Weakness across the pre-market pricing, 0.3% on the Hang Seng Index. Plenty more ahead. This is the China Show.
Your agenda here today, we're watching, of course, this retreat when it comes to, risk assets, just given the Greenland situation. Of course, Japan's fiscal sort of concerns there as well, which rattled the bond market. That did kind of play into the equity market in some way as well. But futures are flat, at least this morning. We're watching, of course, the MSCI China around that 50-day moving average is the key sort of threshold we're watching out for. Renminbi strength as well. We've seen actually when it comes to the offshore renminbi at the strongest we've seen since 2023. The CGB sales happening. We talked about Hulifeng at Davos. And, of course, precious metals, still very precious.
Yeah, gold is more the play today than silver. And I think when you look at price action, and Zijin Mining is, I guess, one of the proxies there, up 1% in the early goings as well. Apart from that, nothing much as far as macro data is concerned in the Asia-Pacific. We do have a rate decision, though, which is out of Indonesia. No change expected there. All eyes still in the JGB market on Japan. We're steadying in JGBs, sideways on dollar-yen. We are extending, though, as an entire cohort here, Asian equities extending the weakness coming through across global stocks. The open is next. Good morning. Welcome back. You want the good news or the bad news? Let's start with the good news. So the fast-acting Imodium has acted quite quickly when you look at the JGB market following the day we had on Tuesday. We're slightly stronger on JGBs. Equity markets, though, have yet to feel the effects of the medicine. That's down to perhaps other things as well. But the fix as well coming in weaker than expected. We were expecting maybe the possibility of a sub-7 fix. We didn't get that yet.
Yeah, given the dollar moves we've seen of late, given this Greenland issue, there's just plenty of headwinds, I guess, in the next few hours and stuff when you talk about the Greenland and President Trump set to speak in Davos.
That's today, yeah.
We have some sense of calm coming through in the JGB market, but yesterday, I think we're still licking our wounds given the brutal sell-off and one of the more volatile ones we've seen of late, right? So at least in the JGB's discussion, Katayama, at least today, seems to have stemmed this route. But then again, equities are still in a bit of a choppy sort of environment. You take a look at how onshore is looking like here right now. We're kicking things off slightly to the downside of Shanghai Composite. We're just lower by about 0.25%. Interesting to note, though, we're watching when it comes to the bond market in China. Seems to be still very insulated from the global bond jitters that we've seen globally, really. But their 10-year yield is still 1 basis point lower here. Watching commodities like copper, we're still coming off some of the initial highs that we've seen for Dr. Copper there. We're down about 1%. Steel is also slightly lower. Interesting enough, we talk about consumption, right? So we talked about these plans for loans, perks to boost investment and consumption. HSBC is interesting about being positive on Chinese consumption and really expects growth in Baijiu. So we'll watch Guizhou Maotai and the like here. They believe, the wealth effect from stocks and stuff, that's going to get you to start maybe being a little bit better about buying, spending. Baijiu, they says, are seeing some signs of improvement. Let's flip the boards and see how Hong Kong is doing here right now. Obviously, the tech space is very much on offer here. We're down about 0.5%. It looks like most of it is really been seen in the likes of Alibaba, but we're marginally lower. But we talked about the whole PDD story overnight, where we have seen consecutive losses for that company. So
7 days overnight.
The regulatory concerns, you have Trip.com as well. That is adding to maybe potentially some concerns. But really, the tech space has been something of risk of late. But then again, we are seeing here when it comes to dollar China, still holding around that strong level at 695 or so. We did see a weaker fix from the PBOC here today. But yeah, not much really catching our eye. Relatively speaking, I think China looking a little bit better than the rest of the region here today. But precious metals, obviously still that clean expression of risk and how to hedge it.
Oh, look at that.
Look at where gold continues to be. We're at 4,800. We had UBP's Peter Kinsella on yesterday saying, I wouldn't even think about buying silver at this point. But gold, he says, there is still room to go. They're thinking maybe even 5,000 for gold. So there you go. You're seeing the likes of Shandong Gold up some 4% here right now. Silver spot prices are coming off just a bit here. We talked about the consumer space. We'll see if there's any kind of reaction given some of these loan perks that were mentioned in that briefing yesterday from the finance ministry as well. A little bit of upside when it comes to some of these consumer names. Dave.
Interesting note coming out of HSBC there, Yvonne's pointing out. We'll talk more about the loan perks in a moment. Yeah, really a good proxy for animal spirits. There we go. Stephen Engel, of course, you might have heard him just now, our Chief North Asia correspondent, is beside us here on set to talk us through, well, there are two things we want to ask you. The stance that China has put forward at Davos, which is fairly consistent, predictable, the anchor of the world.
Yeah.
And, of course, what they announced separately yesterday as far as economic support.
Yeah, I guess we can kind of put them in lockstep as well, because He Lifeng, which we'll talk about in just a minute, also talked about the opportunities of boosting the consumption economy in China, and that then in lockstep with opening up policies and attracting foreign businesses, they can participate in this consumption boom that they're trying to stimulate, because the top leadership in China has stated the number one goal for the economic goal for 2026 is boosting domestic demand, boosting domestic consumption. How are you going to do that? How are you going to get more people buying the Baijiu at the same time when you're having anti-corruption ongoing crackdown?
That's
because
right.
it's the liquor of banquets and the like, and making business happen, right? But that's a separate story. What we're hearing today is more evidence that there might be some more fiscal firepower thrown towards boosting domestic consumption, because the big question was, how are you going to get households to spend more? How are you going to get small to medium-sized enterprises investing more at a time of persistent deflation and price wars across many different sectors? So the Ministry of Finance announcing a slew of incentives to boost borrowing by SMEs. The thinking is they're going to borrow at lower rates for 2 years. They can invest in better equipment, more fiscal upgrades. They can then hopefully get more productivity and profitability, and that somehow will eventually have a virtuous cycle to lead to more consumption. So again, that's $72 billion US dollar, 500 billion yuan loan guarantee facility that will last a couple of years. Again, Finance Ministry says public spending will be increased this year as the government implemented a more active fiscal policy.
Yeah, and He Lifeng really talking about the export side of things, and the China can still remain that reliable partner in trade. Right?
Yeah, I mean,
how did that resonate in Davos, you think?
Well, I think it was a pretty much an expected type of narrative. He didn't bring out any new messaging that they haven't over the last few years. They've always talked about drawing this sharp contrast to the threats by Donald Trump, essentially by portraying themselves as a proponent of multilateralism, free trade, and that they are gradually opening up the economy, greater access to foreign companies, and they're trying to allay fears again of this deluge of Chinese products that could swamp some economies around the world. 1.2 trillion US dollar trade surplus last year. So he has to downplay that and also say, look, come participate in our domestic rebound. That's going to come. What also might come is more trade talks between China and the United States, according to U.S. Trade Representative Jameson Greer. He's saying, all right, we've already done the hard work on export controls and on sensitive tech and also on national security. Scott Bessent even said the Chinese are so far fulfilling their pledges on soybean purchases and rare earth magnets. But what Jameson Greer would like to see in this next round of talks, if they have them, before Trump goes to China in April, which is still scheduled, maybe some talks on lower hanging fruit, the goods and services, to give Trump some sort of deliverable, to give Xi Jinping some sort of deliverable in that summit in China, I would assume in Beijing. Because if they're just going to hammer on about rare earths and national security issues and chips, they might not get a lot of those deliverables.
Yeah, and those are the things we know of already, right? So
yeah,
something to look forward to.
They've come to sort of a mutual understanding on that. It's a one-year truce that ends next December. Maybe they'll have those talks to renew that later.
Oh, I almost forgot about that truce ending in 12 months from November. We're almost there. We're about 3 months, actually, from November.
There are new fronts to be opened.
Okay, well, hence our jobs exist for a reason, right? Steve, thank you so much. Stephen Engel, our Chief North Asia correspondent. We're about 6 minutes into cash market session. CSI 300 a tenth of 1%, 250 billion renminbi as far as the turnover is concerned. Elizabeth Kwik is here with us on set, Asian Equities Investment Director at Aberdeen Investments. Good morning and very nice to see you. Good morning. Tech has so far led the way still in China. Do you still feel strongly that will continue to outperform?
I think when you look at China, tech, and specifically tech that's driven by AI, continues to see very strong growth and innovation. It is a national priority. There's a lot of policy support behind that. The government wants to transform traditional industries using AI. So I think there are a lot of ways to play that, including, AI applications, platform companies, but also the local semiconductor industry, which is going through an extremely rapid pace of localization. So in terms of growth, I would say that tech is still one of the areas that will lead things in the year ahead, especially when you compare them to other traditional sectors which are still going through a relatively tough time, which is why recently we've been seeing a step up in measures to try and boost domestic consumption.
That's right.
To support the economy in general, because I think the impact from a slower property market is not that easy to replace overnight. The wealth effect. So relatively speaking, I think we are still quite positive on the tech sector.
How should I look at, as you mentioned, the domestic side of things, the consumption space right now for this year?
I think it's still looking quite challenging. If you look at recent macro data, retail data, CPI, it still paints a mixed outlook. There are pockets of growth, for instance, in the luxury space, in the premium space. Things are holding up quite well. And then if you look at certain segments, relatively niche, but something like pet food, there's been a structural rise in pet ownership in China. So those companies, they're actually still reporting very good earnings, and in fact revising up their earnings outlook. So I think probably have to be selective if you're looking at consumption.
Yeah, I didn't realize we were going to jump off pet food. To talk about earnings, you mentioned earnings being upgraded. What's the overall take on, what's your outlook on earnings this year? Because people are looking at that after we re-rated on PE last year. In fact, we're slightly higher than historical average right now, and we need earnings to get that multiple higher.
Yeah, I think for the coming earnings season, if you look back at the macro data that's just been released for the last quarter, I think expectations are still relatively managed in terms that we don't see things reaching an inflection point necessarily if you're talking about the economy as a whole. Having said that, there are still pockets of growth. So I mentioned tech, but also in certain parts of industrials, the renewable side of things, advanced manufacturing, some pockets of healthcare. I think those companies are seeing strong growth, especially those that are led by innovation. We can expect maybe stronger earnings on that front.
So it seems like, is it the same playbook as 2025 then? That what worked last year seems to be working again? Or is it but people have been talking it's time for rotation. How do you view that?
I think it depends on how quickly the government can step up their support. We've seen a slew of policies already announced, but the actual impact has yet to be seen. Perhaps we'll see it more trickle through towards the second half of the year. If they're able to do enough on the fiscal side to build up consumer confidence, to get people to spend all the money that they have saved up in their bank accounts, which is still at historical highs, then perhaps we'll see a bit more of a rotation and broadening out of things.
One of the things that's emerged recently from our conversations with other analysts is the themes are changing so quickly.
Yeah.
In China, and not just very quickly, the names leading those themes are somewhat unfamiliar to many, many people. Are you guys encountering that sort of problem? Because you talk about advanced manufacturing, robotics, AI, and
homegrown names that are even hard to pronounce.
Yeah, it's hard to pronounce, and where did the name come from, right? Yeah. We even struggle, who's that?
Yeah.
And I wonder whether that's a conundrum also in your neck of the woods.
It's not so much a conundrum, but it definitely keeps us on our toes, always looking for, a sustainable winner that may have, risen overnight or in a very short time. But I think because of the way how dynamic things are, we are on the lookout for these opportunities, and we actually see these things as attractive investment opportunities for investors. That names that may not be Tencent, Alibaba,
They're
well
not
known.
household names at all.
Not household names, not known by everyone. But that's where you can generate alpha. So we see that as a positive actually, if you can identify some long-term winners.
We have seen, I guess, a lot of this market. I mean, given what we're seeing, U.S. seems to be escalating tensions with Europe, and what we saw at the beginning of the year geopolitically, that Asia seems to be that sort of safe haven play here, where you're not getting that sort of the same sort of volatility. Do you think that there is? Do you think that investors are kind of leaning more towards this part of the world, just given what we're seeing over in the Western Hemisphere right now?
I think the geopolitical environment globally has been unstable, you can say, over the last few years. I think China was at the forefront of that for the past few years, and maybe things have relatively stabilized now compared to what's going on in Europe and between the Europe-US. But I think on the whole, the market is it's not so much that it's gone away, but maybe the market is getting more used to this type of noise. I think the kind of tit-for-tat back and forth geopolitical tariff war that we were seeing in the past, I don't know that that's gone away forever, but if it were to come back, I think the market's more able to digest that kind of news, that noise, and to look through, not be so bothered by short-term noise.
What's the key risk to watch here that's not too obvious? And along those lines, is it one that is external, or is it one that's more domestic in China, as it pertains to the outlook for the market?
I think domestically, that will still be a risk. We know whether China is able to get domestic consumption, domestic growth going again. It is still a huge part of the economy. So, it's great that export numbers are looking good and things like that. But when it comes to domestic consumption, I think that's still a major driver of overall economics. So, hopefully that will come through.
Elizabeth, thank you. Elizabeth Kwik there, Investment Director of Asian Equities at Aberdeen Investments. We're checking when it comes to FX here today. Obviously, when it comes to some of the moves that we see in the dollar, once again, overnight, we continue to see an extension of that weakness here during the Asia session. You are seeing some strength coming through when it comes to Korean won, Japanese yen as well. We are sub 158 levels too as well, given some of the calming words that we heard from the finance minister at Davos. But yeah, 6.95 for dollar China here this morning. This is Bloomberg.
Welcome back. We're headed straight back to Seoul, where, as you can see, a live briefing, New Year news conference is taking place. That's the president, of course, the South Korean president, outlining the direction of government policy, his take on economics. And currently, what we're looking at is I think this is the question and answer portion with journalists. And one of the things that has emerged so far from the briefing are comments coming through on the currency. And in fact, the currency is, in fact, pun intended, the won is the big winner so far in the session today. As the president says, he expects the currency to rally to 1,400, and it's comparing, of course, the weakness that we've seen there compared to the Japanese currency.
Well, yeah, relatively speaking, I guess.
Yes, point to the weakest one in the room and say, I'm stronger.
Also saying U.S. chip tariff move may accelerate U.S. inflation. That's according to the president as well. But they're not too worried when it comes to these tariff talks. So certainly that could be one thing to watch here as well. Meanwhile, we've been talking to, of course, Hong Kong's financial secretary in Davos. He says the city will need to issue bonds to finance a new tech development known as a northern metropolis, even as the budget returns to surplus. Speaking to us there, Paul Chan also said he's optimistic about renewed IPO momentum in the city's stock market.
Well, people are looking safe havens to park their funds, and at the same time giving them good returns. They are looking for policy consistency and predictability, and in that sense, Hong Kong offers excellent alternative for them.
Of course, you're looking for fiscal surplus in 2026, quite ambitious, some say. But you remain confident. Why is that?
Well, 25-26, meaning year-end 31st March, operating account definitely a surplus. But you know, our account composed of operating account and capital accounts. Land revenue still needs time to go back to previous level. But we do need to expedite the investment in Northern Metropolis. So overall speaking, we still need to issue some bonds to finance the investments in Northern Metropolis. But going forward, I'm pretty confident because on the operating account, we will still registering services with our fiscal consolidation policies. In the past 2 years, we control expenditure growth and grow a little bit of our revenue source. And for the Northern Metropolis, we are also experimenting different options. Say, for example, inviting investors or technology companies. They come, we just give them a parcel of land of huge size. They can do the infrastructure, they can bring the ecosystem over. In that sense, expedite the development process. And on the other hand, cut down the government's commitment in terms of infrastructure provision.
You talk about plans for the Northern Metropolis because that is a priority for China as well. I'm just wondering, is there reason to spend big on the Northern Metropolis when your financial conditions are still stretched at this stage?
We see this as investment. So we invest upfront to grow the ecosystem. When the companies come, they bring their ecosystem over. In future years, they will pay me tax. So we invest upfront and get the return in later years. In the meantime, the cash flow differences, we use bonds to finance a bit of it.
And that was Paul Chan, the Hong Kong Financial Secretary with Has there at Davos. Right, so if you're one of our Bloomberg clients and you can rewatch that specific interview, you can go to TV Go, interactive TV function on the Bloomberg terminal, become part of the conversations, yeah, and more. Check it out, TV Go. This is Bloomberg. Right, just a check of markets right now. Precious metals, what has been consistent is this, almost non-wavering focus on the space itself. What does change, though, is within this there seems to be a different one every day. It still is gold today. Silver's not so much in focus. Platinum, though, has again given us something to talk about. That's a record, effectively. 2511 is the number to watch, and as you can see, we're effectively there as far as platinum is concerned. That takes us into, separately, the Baidu story on a day where most, in terms of market breadth, were negative across the benchmark constituents. This is really one of the standouts, and not just marginally up, substantially up, about 2%.
And you got to wonder why you're seeing that upgrade from Morgan Stanley. Well, when it comes to their AI assistant, it's a milestone here, according to some reports from Dow Jones, that they've surpassed 200 million monthly active users for the Ernie assistant. So could be a potential milestone or catalyst there for the stock here today. We're watching the property stocks in Hong Kong in particular. Interesting call made from JP Morgan. They're saying, watch the earnings season this time around. Should mark the bottom for most Hong Kong developers, with profits poised for a turnaround. That's according to Carl Chen and his team. But they also upgraded New World Development to neutral from underweight. So they're saying some of the biggest investor fears have already materialized, according to them.
Yeah. Well, the thing is, we heard it before. Not to say that they're wrong, and hopefully they're correct there as well. But yes, it's something to certainly pay attention to as we make our way into more Fed cuts, right? Which really goes into the prospects here in Hong Kong. Benchmarks, there's really not a lot to talk about on the benchmark basis today, apart from the fact that, so far the working projection is about 100 on MSCI China is the target for this year so far. We're sideways to flat the benchmark itself. Can I ask my producers, can you guys bring up 8460, please? I want to talk about JGBs. Why not? We have time anyway. And the 8460, thank you. Widowmaker trade, no longer a widowmaker, right?
Yeah.
It's the one that was consistently a loss-making operation for traders, has now been a rainmaker, in fact, because of all the losses we've seen in the last few years here. It's really been consistent.
It has been, and I think, obviously we heard from Katayama, which, as you say, was the perfect timing to really kind of calm this market down. But then again, How long-lasting can this rebound be, just purely on verbal intervention? When you talk about one of the brutest sell-offs we've seen since Liberation Day, do we need the finance ministry, do we need the Bank of Japan to step in eventually here? Long time until February 8th, that snap election.
That is a long time. Many things can happen. I mean, many things had happened in the last 2 hours. So we'll have plenty more ahead on the Japanese story and others. This is Bloomberg.
Welcome back to the China Show. Sunny skies in Shanghai. I believe it was snowing this week as well. So we are dealing with some colder temperatures here, also here in Hong Kong this morning as well. We're flat when it comes to MSCI China, but you're seeing a little bit more upside when it comes to onshore markets here today. CSI 300 is up about 0.4%.
Yeah, this cold snap here in the city, and the warning coming through out of weather officials, of course, until tomorrow, I believe.
Yeah.
Right? So, yeah, that's why my knees are slightly slightly aching today.
Making some cracking noises.
Yeah. Yvonne knows all about the stretching I need to do to make myself available. That's also to say, everyone maybe who did run the marathon on the weekend, so if you're still aching and hurting, it's normal. What's concerning me, though, is this sneeze-a-thon that's happening. Speaking of marathons, a lot of people have some form of bug.
It comes with the cold weather.
It does. Yeah. It does. So just vitamin C, zinc, and avoid people. Avoid people as much as you can. Speaking of, so far we've managed to keep above the 7 handle on the fixing out of the PBOC so far. We're extremely close. We have been extremely close in recent days, and so far we've held above that. Of course, this is the fixing. This attracts the fixing, of course, and if you go all the way back to May of 2023, that should take you to the last time we actually had a sub-7 fix. Takes us to the currency markets, where because of that, the Chinese currency did see a little bout of weakness coming through. Hence, we are weaker, as you can see, stronger in the Japanese currency. The dollar and the South Korean won, not on your screens, is actually the standout across FX today on the back of pronouncements coming out of Korea, and the president are talking about expectations around a rally to 1,400. On the currency, Europe's very much in focus. You have Davos, literally in Europe, of course. You have everything, conversations around Greenland, and that is still, as you can see, pressure coming through in the equity markets. Futures pointing down 1/4%. What has stabilized is the JGB market, with yields pushing lower. Last we checked, 10 basis points and some. We have paired those gains a little bit, but still, as you can see, a down arrow story on the yield space following yesterday's wipeout. Equity markets and VIX futures, Asian VIX benchmarks of vol here in the city, slightly mixed, but it's a good thing that we are seeing the pair back a little bit on VIX futures following the worst session on Wall Street since, I believe, April of last year.
Yeah, I think global markets are finally waking up in some ways after what has been a very buoyant, start to 2026. Now you're starting to see some of these fiscal concerns really kind of emerge, and I think Japan kind of sparked it at first. You add that to some of the angst around Greenland, and President Trump set to speak in Davos, whether he tries to ease tensions with the EU when it comes to Greenland or actually escalate it further while he's in their territory. That certainly is going to be a key focus for the market as well. We haven't even talked about BOJ. No. Right, and what they can or cannot or will or forced to do when it comes to stabilizing this bond market. But at least for now, seems like the words from Katayama in Davos. Katayama,
yes.
Is at least helping today.
Please calm down.
Calm down.
Calm down for now. In fact, let's hear exactly from the Japanese finance minister, as Linda spoke to her, of course, at Davos recently.
I don't have any concerns about the absorption of JGBs going forward because we have a well-thought-out plan for JGB issuances. I believe the Ministry of Finance of Japan is perhaps the best Ministry of Finance in the world in terms of our close communication and careful communications with the market participants.
Investors obviously disagree with the perception that you hold right now. They say that JGBs are not the ones to buy at this point in time. There are huge concerns about your finances. How do you respond to that when they say that perhaps Japan's bond market is a canary in a coal mine?
I think those concerns are misplaced. We put a lot of importance on sustainability of our public finance. If you look at the draft budget for all this year, for the first time in 28 years, we will be achieving a primary balance surplus. If you look at our economic policies, through our economic policies, the plan is to expand the size of the Japanese economy. We have already seen an increase of tax revenue by 84 trillion yen, and we are to spend without additional borrowings. And as if you could look at our dependency on JGBs, the public debt dependency is at a 30-year low. As the Minister of Finance, I am not going to ignore the concerns in the market. The Prime Minister has been talking for the past couple days about an election to ask for the confidence of the public. She has talked about a possible plan for reducing the consumption tax rate. I know that is one of the reasons why the market has become rather nervous. But she has said that Japan is not going to depend on issuance of deficit-covering bonds. Since October of last year, we have taken a very responsible approach to public finance, talking about responsible, sustainable, and proactive fiscal policies. We are not taking expansionary fiscal policies. And this is demonstrated by some of the numbers that we see. So I asked the market participants to calm down.
What concrete steps will you take to fund all the spending plans? There have already been massive, significant stimulus, and now the Prime Minister has said she's cutting the consumption tax, which amounts to 8%. That leaves a huge hole, I suppose, in revenue.
The Prime Minister is talking about reducing the consumption tax rate only for food items. Even with that, there will be quite an amount which will be required. But we have already reduced gasoline tax, and we have secured the financial resources every time we have decided on spending. We have explained it to the IMF as well. Just last week, I was in Washington, D.C. to attend the G7 and like-minded countries meeting, and we had a bilateral meeting with Managing Director Madame Georgieva of the IMF. And she knows that every time Japan takes an action, we have paid careful attention to fiscal sustainability, and we have been mindful of ensuring fiscal sustainability. We know that public debt dependency has been coming down, and she gives credit to that, and she fully appreciates that. This year, the fiscal deficit to the GDP of Japan will be the lowest among G7 countries, which is not widely known. And it is within this framework that the Prime Minister is talking about eliminating wasteful tax exemptions.
The market's obviously still not confident about Japan's finances. We're seeing 30-year JGB yields higher than the bunds of the same tenure. Might you want to stabilize the bond market somewhat? Might you ask the BOJ to increase its scheduled bond purchases Wednesday morning just to bring that stability to the market?
Of course, we will work to restore the market confidence, and we have already been in communications with institutional investors. We have already been in communications with the BOJ. I wouldn't be attending this Davos meeting if there were something that we could officially announce.
So you're willing to take concrete steps to bring stability to the Japanese bond market?
I've been in the position of Ministry of Finance for 4 months now, and it might not be as much as you imagine, but I have taken concrete measures to bring stability to the market. What I can say is that we have done so, and I will continue to do so.
Don't worry. How are you assessing the risk of contagion? We have seen treasuries getting impacted. We have seen the Australian bond market getting impacted. Might we see what's been deemed as the bond market meltdown in Japan impacting the rest of the world?
The recent JGB auction went very successfully, and we have a well-thought-out future option of the JGBs, and we are confident the future upcoming auctions will be successful as well. I don't think it's right for me to talk about the potential impact.
And that was the Japanese Finance Minister Satsuki Katayama speaking with Haz at Davos. And of course, keep in mind, if you also have dual screens and you're watching us, also there's a live Q&A going on Japan, featuring our very own Sherry-Ann and several of our colleagues as well. Coming up, we're going to speak with one of the authors of a new report that games out the potential economic fallout from a hypothetical conflict between China and Taiwan. Zach Cooper joins us in the next side of this segment. This is Bloomberg.
Multilateralism is the right way to keep the international order stable and promote humanity's development and progress. The rules must apply equally to everyone. A handful of countries should not enjoy privileges based on their strengths, and the world must not return to the law of the jungle where the strong bully the weak. Every country is entitled to defend its legitimate rights and interests.
He Feng there, China's vice premier and Beijing's top trade negotiator, speaking at the World Economic Forum in Davos, and he presented China as an advocate of cooperation, free trade, and multilateralism, reiterating many of Beijing's frequent talking points, of course, while He Feng insists that China backs this real rules-based global order. Obviously, there are a lot of questions about Taiwan emerge, right? And whether Taiwanese independence remains a clear red line. Beijing has been ratcheting up pressure, staging its most expansive military drills in decades near the island last month, including a live-fire exercises and even no-fly warnings. And Chinese President Xi Jinping has told the People's Liberation Army it should work to become what he calls a world-class military. 2027 marks the centenary of the PLA, and some U.S. defense planners have linked that date to a potential attack on Taiwan. But Chinese officials dismissed that notion of any timeline for any invasion. Now, Washington has long maintained a policy of strategic ambiguity when it comes to Taiwan, but the U.S. has helped arm the island, including an $11 billion weapons sale announced in December. Beijing maintains it has a right to take the island by force, if necessary, to prevent its formal independence.
People talk about the status quo in Taiwan Strait. I would argue there is no status quo that is static. Yeah, with each provocation and with each response from the PLA, the status quo would be changed irreversibly, towards the favor of the Chinese mainland.
If China attacks Taiwan is the title of the December report and study out of the German Marshall Fund that's gamed out two scenarios of how that conflict might develop. Joining us now to talk us through this is the co-author of the report, Zach Cooper, Senior Fellow at the American Enterprise Institute. Also with us here to join the conversation is Stephen Engel, our Chief North Asia Correspondent. Zach, good morning from the Asia Pacific. Thank you for joining us. Well, let me just get maybe started with the obvious and the simple. What was the rationale behind the study? What is the objective here, that you guys want to shed light on?
Well, thanks, David. I think the key question for us was we spend so much time looking at scenarios in which the United States loses a conflict over Taiwan. And as an American, we test out those scenarios to understand where our weak points are. But sometimes it implies that actually in any conflict, the U.S. would struggle and that China would be wildly successful. I think most of us believe the opposite. And so this was an effort to look at what the cost to China would be in 4 different areas. We looked at economic costs, we looked at domestic political costs, military costs, and then diplomatic or reputational costs. And the surprise to me was that I think in all 4 areas, the costs are quite high. I wouldn't assert that they will be enough to deter Xi Jinping if he feels that he has to take action, but I think the costs are probably higher than most people would otherwise assume.
Can you walk us through some of the costs, whether it's economically, militarily, and even social stability? I know you have 4 pillars there of what some of the scenarios that you've laid out.
Yeah, I think some of the most obvious costs are the economic ones, and Bloomberg has done a great job demonstrating how costly this is. Some of the data that's come out has suggested it could be close to, let's say, 10 to 15% of GDP. So that's obviously a significant figure as a conflict goes on. But what we try to do is break this down into 2 different kinds of contingencies. One, which was a relatively minor skirmish, and then a second, which was a much larger war. And I think what you see is that over the course of these 2 conflicts, they look very different. So a minor skirmish, the costs are relatively small and they're sort of short term, whereas a major war, these are massive costs. They take a very long time to deal with, and they could last for many years. And so if you look at the economic costs, it's not just in terms of trade at the point in which there's a conflict, it's also what happens to trade and supply chains long after that. Just one other item I would highlight is I think some of the work here on the domestic stability threats is really new and important. And one of the takeaways for me was that the challenges that Xi Jinping might face in a failed conflict could be huge, not just for the People's Liberation Army, but also for the other Chinese domestic security services that would be responsible for upholding order in the aftermath of a failed conflict.
Zach, Steve Engel here. I see the result, or the report essentially goes into the results of these different scenarios and the outcomes. How much goes into the rationale for doing so? Because I also see that, again, the German Marshall Fund is a nonpartisan organization that essentially advances transatlantic partnership. I want to kind of bring that to the fore with today's headlines, with what's happening between the United States and Europe. When we're talking about the rationale, does the calculus of essentially a deterioration of cross-Atlantic alliance between U.S. and Europe embolden Beijing to carry out one of these scenarios, or does it essentially undermine what they've been talking about at Davos, and that is they are the responsible world power right now?
Yeah, I think a lot of people would have sort of chuckled at the comments that you aired from He Feng. But now I think those are going to appeal to a lot of countries who are watching what the United States is doing with Greenland and has done with Venezuela. I think at the end of the day, this really does undermine security in East Asia. And one of the reasons is that so many of the costs of China depend on international responses. And yes, the US might be the biggest player there. Japan is certainly critical, as are South Korea, Australia, and others. But Europe has a really important role to play. And one thing that the Biden team had been pretty good at was getting a lot of European allies and partners on board with at least contemplating strong responses to a Chinese use of force against Taiwan. I think it's going to be a pretty hard sell these days for the United States to be asking Europe to take on, let's say, the anti-coercion mechanism that they've developed and use it against China. In fact, they're talking about using it against the United States over Greenland. And so I think this absolutely undermines deterrence. It doesn't mean that I would expect Xi Jinping to take action against Taiwan anytime soon, but I think it is damaging the cross-strait stability that we all hope will be able to be maintained over the next few years.
Zach, just looking at the major war scenario that you guys are playing out, I just want to ask what the assumption is of the study in terms of the extent of U.S. military involvement.
So in the major war scenario, we assumed a pretty great extent of U.S. involvement. And the reason is, if you're a Chinese military planner, one of your incentives is to go big and go early. And what I mean by that is you can either leave U.S. forces alone across the region, or you can strike them very hard, very early. If you don't strike them early, you put at risk Chinese forces that would be very vulnerable to U.S. attacks, especially large amphibious vessels that would need to cross the strait. Remember, we're probably talking 300,000 to 400,000 Chinese troops that would have to land on Taiwan, and they're not swimming there. They've got to get there on boats. Those are extremely vulnerable platforms. And so we assumed in the major war scenario that the Chinese would probably try and strike U.S. assets, whether that could be a U.S. aircraft carrier right at the outset, or facilities in Okinawa, Guam, and elsewhere. And from my standpoint, that means the U.S. has to fight. I know, every American president has their own predilections on this issue, but I think if you saw a 5,000-person U.S. carrier disabled somewhere in the Pacific, I think Americans would probably force the president to fight. So that was our assumption. And I'll say, of course, these scenarios would look really different if the U.S. wasn't so engaged. And so the minor skirmish we looked at had a much lower level of engagement where we really had just Taiwan and China fighting it out. And you see very different costs to China in that scenario.
But Zach, you also, in both of these scenarios, conclude that the PLA would not be victorious, correct? And if you're sending missiles to U.S. bases in Japan and to Guam, that would almost assuredly bring the United States into a full-on war, which would sort of undermine the main objective there of Beijing, and that is unification with Taiwan.
Yes, Stephen, I think that's right. And, one of our going in assumptions for this project was to look at what happened in a failed Chinese effort. So we weren't trying to examine the possibility that China might succeed. But I'll say, as somebody that used to do war planning at the Pentagon, my assumption is still that China would be very successful in the first few days of a conflict. And then they would bog down, particularly in an amphibious conflict where they'd have to transit such a difficult body of water with so many troops and keep them supplied. This is an incredibly difficult operation, and you're talking about a military that hasn't done anything of this sort, a major conflict, since 1979, and they lost that conflict. So this is really hard for even the best militaries. And so my assumption and our assumption in this report is that the Chinese side would have a huge amount of trouble trying to carry out those types of operations. But even if they were moderately successful, many of these costs still apply, right? The economic costs, the cost of the military, they would still be quite serious.
And Zach, I have to bring it back to kind of the news of late, right? It took days for the U.S., for example, to take over Venezuela and its leader, Maduro. In your view, do you think that there is a feasible scenario where this could be a very swift and total Chinese victory of Taiwan?
So I do think we have to worry about what I would call a decapitation strike, which is essentially what the United States did with Venezuela. I will admit, even I was surprised at how proficient the U.S. was in carrying out that operation. I doubt that the Chinese could do anything similar, but the scenario that a lot of us have worried about is whether they could do, let's say, missile strikes with very little warning against the Taiwanese presidential compound. Is that possible? Perhaps. I think it's unlikely, and it wouldn't necessarily give them control over the island. But in the aftermath of the Venezuela operation, I think both Taiwan and China are probably looking much more seriously at decapitation strikes and probably preparing either to threaten to use them or to defend against them. And so this is something that I would think the Taiwan military is going to be looking at very seriously and trying to think about probably bolstering some of the defenses around the presidential office and some of the key defense ministry compounds.
So, Zach, we've laid out the potential consequences in both cases. What's the conclusion? Is the undertaking worth undertaking?
Well, my view has always been that actually Xi Jinping is relatively risk averse when it comes to these kinds of major decisions. And so I think this just adds fuel to that argument that the cost of this sort of operation would be so high that it would be a pretty huge risk and unlikely to be successful. And therefore, it's not something that he should do unless he feels that he's absolutely boxed in. And I don't see Lai Ching-te, I don't see Donald Trump boxing Xi Jinping in the next couple of years. And so that makes me somewhat more confident that although I think we're going to have a very difficult period between now and, let's say, 2028, when there are elections in Taiwan, that I think we can hopefully maintain deterrence. And so the big takeaway for me is just about how huge these costs are in very different areas and how difficult they would be for Beijing to manage. And so I think that is a cautionary tale for Chinese leaders when they're thinking about potentially taking military actions against Taiwan.
Zach? Thank you so much for coming on and bringing us your report. So Zach Cooper, Senior Fellow at the American Enterprise Institute, and also our thanks to Steve, our Chief North Asia Correspondent. Of course, if you are a subscriber and want to rewatch that interview, you can watch it through our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages, questions for our guests as well. Check it out at TV Go. Markets looking like this here right now in the face, of course, bond market rattles in Japan, the like here. We are actually seeing when it comes to Chinese markets, Hang Seng is doing a bit better than, of course, Japan and Korea here right now. This is Bloomberg. Ah, 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break in just a moment. And yeah, I think we need to catch a break,
well,
to say the least. When it comes to the rattles and the shock that we saw among bond traders yesterday here, that melt up in yields, something we really haven't seen since April of last year, Liberation Day. So it seems like right now things have at least calmed a bit, given some of the calming words from the finance minister in Japan while she was speaking to Has in Davos, saying, look, chill out. Nothing to see here. And as we talked to Jesper Koll about, right, this is just Japan going back to normal.
Yeah.
We haven't seen that in more than a decade or so. But, Japanese JGB yields of the 10-year, he says, should not be at 2%. 3.5% to 4% might be more of what he says is actually reasonable.
Should be the case.
Yeah.
Should be the case because it's now...
exiting stagflation. Yeah. It's, all that.
Hence, the Widowmaker trade is now a Rainmaker, right? That trade is long gone. Bank stocks, obviously, we're tracking that given the melt-up in yields and the pullback back down, which is fairly almost a mirror image of where yields go over in Japan. The rest of the region, though, might have a different risk premium being built in here because apart from, obviously, what did get exacerbated by the melt-up in yields in Japan, and to some extent, of course, the Treasury market also reacted quite badly to that yesterday. There's also, we're moving into this big risk event of the U.S. president and his speech at Davos later today. In fact, a few minutes ago, we just showed you these pictures out of the U.S. where Air Force One, of course, I believe just took off headed for that part of the world. So we'll obviously be on top of that story once we have more information there. And lots of good conversations are coming up, of course, from our team there at Davos. Nothing else is happening across these markets. Mixed Asia dollar index, which is a reflection of broadly the state of currencies, Asian FX, might have to do with the outperformance of the Korean won today.
And perhaps what's been lost in some of the headlines was what we heard from that briefing yesterday from the finance ministry from China, right? Announcing a range of incentives to spur investment and consumption. The Ministry of Finance says this includes a $72 billion loan guarantee facility for private companies to buy equipment and raw materials and upgrade technology. For more on this, let's bring in our economist, David Chu. He's with us. Your take on what we heard, this announcement.
Yeah, so actually, what we can say, it is not a surprise because the government had reiterated that they will give more support to the SMEs. But what makes it a surprise is the timing. Usually it comes around the NPC, the National People's Congress session, but now it comes earlier. So I think it means that the government is something serious or very eager to give the support to the SMEs.
Yeah, things are coming early. In fact, before we talk about the bull run and what that is doing to sentiment, something that also came early, in fact, to a surprise, was the structural rate cut, right? And we were, obviously, very few people were expecting them to move specifically on that rate. But what do you think that is signaling from a policy perspective?
Well, I think it means that for the next well, actually this year and the next couple of years, supporting the private sector and the consumers will be a center of the policy orientation, because of all of the things happening in China. So, I think that the signal is clear.
There's an interesting report that you guys came out with, too, about, obviously we've seen this stellar run in equities, and that still seems to be continuing to lift the mood out there, but not so much when it comes to spending. Why are we not seeing that sort of wealth effect play through in the real economy?
Well, when we go back to a year ago, when we talk about why the government wants to raise, to boost the stock market, one of the reasons we thought it was that the government wants to boost the sentiment so that to boost the consumption and the investment by domestic companies and households. But now it seems that, yes, the government, the stock market is boomed and the sentiment in the market is okay, it's hot. But still, we didn't see the boom in the consumption side. I think one of the reasons is that the income from the stock market does not account a large share in China households' income. We saw the data; it is less than 10%. So that it means that yes, it happened and it helped some of the household, but not a lot.
David, thank you. David Chu there, out of Bloomberg Economics here. We'll take you straight back to the joint base in Andrews, of course, as the U.S. president is. My mistake. I thought the Air Force One had already taken off. He is still, of course, yet to board Air Force One, but that is, of course, the...
that was a chopper.
That was
arrived, and then now he's about to step
there we go.
onto the plane.
Okay.
There you go.
Yeah, transit. There
Giving
we go.
Photographers and reporters a bit of a nod there on as he steps into WF in Davos. And certainly his speech, 2:30 p.m. local time, is going to be front and center here. Is he going to use this platform to ease rather than really escalate, or rather escalate tensions over Greenland? He is heading to, of course, Europe. Their territory here. We've already seen the response, the pushback from European leaders, although, as you say, they have been split in terms of what the overall response is going to be. But there you go, stepping onto Air Force One this evening. This is Bloomberg.
Right, welcome back. You're watching The China Show. More to chew on the China AI story. We are getting just a few lines from this briefing taking place out of Device Industry Minister Zhang Yunming, talking about how they're looking to promote high-quality AI development and that the broader aim, and so far, again, this one has largely just started, I believe, so not a lot of details just yet. China aims for tech breakthroughs in chips for AI training specifically. So far, that's what we have. Just to flag that is something to watch, of course, as we go into the thick of things, not just today, but of course, just how this broader AI play. Keep in mind, right, we are moving into the anniversary, if you're not keeping track, of the DeepSeek moment from this time last year, right, which really changed the complexion of many things from that point in time.
I can't believe I missed that. Yeah.
Right.
Just watching from home the craziness, but certainly, yes. They are reiterating this once again, right? These tech breakthroughs when it comes to chips, that still remains some of the key leaders in this equity rally of late. We were hearing from some sound from Davos as well, from the likes of Google, Deepmind. Yeah. And they're saying that Chinese AI companies have not been able to innovate beyond the cutting edge of technology and remain behind the frontier AI of the leading Western labs. The CEO spoke with us at the World Economic Forum in Davos.
It's been hard work, really hard work getting our technology and the models sort of back to state of the art. I think we did that with Gemini 3 especially, and Nanobun on our imaging software. And then I think we've also sort of adapted really to this new world of shipping very fast, kind of bringing a kind of startup energy to what we do. And
do you think people underestimated Google? Or got something wrong?
Yes, maybe. I'm not sure. I mean, I think we always had the ingredients, to be at the forefront of this. Obviously, we've got the long history in it. I think, over the last decade, Google and Deepmind, between us, we've invented most of the breakthroughs that the modern AI industry relies on now. Obviously, transformers most famously, but AlphaGo, deep reinforcement learning, these things. And we have these incredible product surfaces, billions of user services that natural fits for AI, actually, from search to email to Chrome. And but it's just getting all of that together and organized in the right way. And I think we've done that in the last couple of years. And there's still a lot more work to do, but I think we're starting to see the fruits of that.
A year ago, DeepSeek seemed cataclysmic for the West. Now, a year later, it's quiet. China seems to have been quieter.
Yes.
Has your opinion on competition from China changed?
Not really. I mean, I didn't think it was cataclysmic in the first place. I think it was a massive overreaction. In the West, it was impressive. And I think it shows that the Chinese are very capable, the leading companies. I think companies like ByteDance actually, I would say, are the most capable. And they're maybe only 6 months behind, not 1 or 2 years behind the frontier. So I think that's what DeepSeek showed. Some of the claims were over-exaggerated about, you know, the amount of compute they used and being so minimal and so on, because they relied on some Western models and also fine-tuning on the outputs of some of the leading Western models. So it wasn't sort of de novo. And the other thing I think so far is not, you know, yet to be seen is, can China actually, the Chinese companies, innovate beyond the frontier themselves?
Yeah, there we go. That was Emily Chang, of course, at Davos with the Google DeepMind CEO. Right, let's turn our attention now to a story we've been tracking very closely. In fact, I would say not just a couple of days, a couple of weeks, if not months, when this all began, of course. So this broader investigation, regulatory investigation into Trip.com, that's of course the dominant travel platform in China. It's exposing really how its pricing policies are trapping, specifically in this case, hotel operators in a discounting spiral. Now, Trip controls about 56%, as you can see on the screens there, of the Chinese online travel markets. And of course, the folks in the industry, hotels specifically, have been telling Bloomberg that they are forced to constantly cut prices to remain visible on the platform.
Yep, joining us now is our senior global business reporter, Yuan. She has more on this here. So tell us a bit more about what the government is investigating here and what are they trying to achieve?
Well, the government issued a very brief statement last week in which they said they're investigating Trip.com for abuse of its market position and monopolistic practices. It didn't go beyond that. We've now spoken to hotel chains who operate on the Trip.com platform, known as Ctrip in China. And they've basically outlined, you know, these practices that they say, that they allege are very abusive to them. And they feel like they're locked into exclusivity arrangements, into these constant, you know, cutting of prices that just really leave them with these paper-thin margins. And in some cases, apparently the price cuts are unilateral. We spoke to one hotel homeowner, you know, who is an owner of a homestay. So it's just a very small single property guy. And he said last year, Ctrip constantly cut his own prices, his own hotel rates. And he only found out about it when his customers came in to check in at the hotel. And he said, of course, he complained. They wouldn't do anything. He, of course, has to absorb all of that cost. And what really got him angry was that the commissions that he had to pay to Trip.com was based on the original price that he had posted. And they were cutting slashing prices by like as much as 66% in some cases. So it's really leaving these guys with these really paper-thin margins at this point. And they say they can't continue like that.
If at all, there is a margin left in some cases, right? So, like, easier said than done, but why does he have to live with it? Why can't he just ditch and go to another travel website, for example?
That would be easy, right?
Yeah.
I mean, that would be the easier option. I mean, as we said, I mean, Trip.com is the dominant player. They've got 56% of the market. The next biggest player has only 15% of the market. So in this environment where it's so competitive with online travel, it really is about hits and clicks, and bookings are all happening online. So they can't really go anywhere else. For even the top tier merchants, they say that, you know, they're locked into these exclusivity arrangements where they can't list their hotels on any other website. And if they do, then their search rankings immediately plummet. They're not seen to people who search for trips, and you know, at the end of the day, they feel like they're stuck on these websites. And right now, these hotel chains are operating in such a very competitive environment. I mean, hotel supply has tripled in some of these regions, and so it's everybody's. It feels like it's a race to the bottom.
Yeah, and it sounds like we're seeing something similar in the food delivery space, right? And we have seen antitrust probes and big fines on some of these tech companies like Alibaba, like Meituan. Do you see similarities of what's happening with Trip to what we're seeing in the food delivery space?
That's such a good point. We did see Alibaba get a record fine for its monopolistic practices. We don't know exactly what the market regulator is investigating when it comes to Trip.com, because they haven't said specifically. But from talking to hotel chains, there are definite echoes of similar practices that Alibaba and Meituan engaged in, that the market regulator was very concerned about, that perhaps may be at play here.
Have we heard from the company at all? Have they
the company said that they are cooperating with the corporation. They are cooperating with the investigation. But when we asked them specifically about the merchants' complaints, they declined to comment, since it is an ongoing investigation at this point.
Okay, Juan. Thank you so much, Juan Han, there on really what we've been seeing around this regulatory scrutiny, which seems like that has kind of emerged a bit here, whether it's with Trip. We talked about the food delivery space, even Pinduoduo. The last couple of days, and the stock really continues to be downdrift here. In terms of what Asian markets are doing as we go to a break here, this is what we're seeing across, of course, risk assets, and Hang Seng as well as the CSI 300 looking a bit better, as we say, from the rest of the world. Singapore as well as Kospi seeing some declines here. This is Bloomberg.
On Arctic sovereignty, we stand firmly with Greenland and Denmark and fully support their unique right to determine Greenland's future. Canada strongly opposes tariffs over Greenland and calls for focused talks to achieve our shared objectives of security and prosperity in the Arctic.
Without collective governance, cooperation gives way to relentless competition. Competition from the United States of America, through trade agreements that undermine our export interests, demand maximum concessions, and openly aim to weaken and subordinate Europe, combined with an endless accumulation of new tariffs that are fundamentally unacceptable, even more so when they are used as leverage against territorial sovereignty.
I doubt it. Look, they need that agreement very badly with us. They really do. They fought very hard to get it. So I doubt that, but we'll see what happens. We have a lot of meetings scheduled on Greenland.
Just a few hours away from that Trump speech in Davos as well, where you're hearing him from just now saying he's confident that the EU will stick by their trade deal, even if he imposes new tariffs in his quest to take control of Greenland as France blasts his strategy. That brings to a big kind of longer term implications when it comes to markets, right? I mean, obviously, when you have transatlantic relations escalating here, what does that mean for European investors that have such big holdings of when it comes to U.S. assets, right? They're the largest in terms of foreign economies that actually hold
U.S. Treasuries,
treasuries and bonds, right? And they're greater when it comes to even Japan and China combined. So what are they going to do about that? Is there really some sort of weaponization of capital that could happen here? And as we talked about, that Danish pension fund, they said, they might actually have inklings of not, at least exiting out of their position when it comes to U.S. Treasuries, too.
That was Anders Schelde, the chief investment officer, that specifically for that pension fund said that the U.S. is basically not a good credit and long-term play as far as U.S. government finances are not sustainable. So that is seems a credit decision. But yeah, I mean, that's a difficult situation to be in, right? Because there's so much skin in the game. If you think about it, too, right? So this time last year, when it was the U.S. and China part of the conversation, right? We were talking about how would China weaponize its holdings of U.S. Treasuries, and now you just changed the name. You keep one the same, but it's the Europeans. And, there's a reason why they are the biggest now, right? Because China has stepped back from the U.S. Treasury market over the last few years or so.
And always the question is, would they be also shooting themselves in the foot by doing so? I think the same case goes for Europe as well in this case. And I guess you heard a little bit about that from Sergio Ermotti, the UBS CEO, saying that Europeans tempted to weaponize their holdings of U.S. government debt are making a dangerous bet that risks backfiring. Speaking to Bloomberg, Ermotti said diversifying away from the U.S. is impossible because it remains the strongest economy in the world.
Diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the US. And also from the dollar is a quite dangerous bet. Things can change rapidly, and the U.S. is the strongest economy in the world. The one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the U.S.
There seems to be a difference between how the politicians and the policymakers talk about America right now and the backdrop for international relations and how a business person thinks of America, the economy and the opportunity. I've mentioned this stat a number of times already today about the survey that PwC put out. They surveyed 4,500 CEOs and the top destination for capital for investment, America, and it was up on last year. As a bank boss right now, a CEO who's thinking about expanding around the world, why is US still top of mind for you?
Well, because from our standpoint of view, we see two big levers. First of all, wealth creation, GDP growth, innovations, and also more idiosyncratic to UBS is that we see potential for us to become more present, increase our market share. So that's one place. On the other hand, we are also very big in Asia. I mean, we manage $1 trillion of assets there. We are growing very fast. The economy is growing. Half of the population in the world is living there and is creating new wealth.
There you go, the UBS boss, Sergio Ermotti, speaking with John Ferro, of course, in Davos. Just some other big political headlines we are tracking at this point. Let's get started and have a look at the U.S. Justice Department. Bloomberg has been told that it has subpoenaed the Minnesota governor, Tim Walz, and other state officials to investigate whether they impeded federal immigration operations. Meanwhile, President Trump has said that ICE agents sometimes make mistakes, even as he broadly defended his migrant crackdown. The president's comments came as polls suggest declining public support for his hardline approach.
They're going to make mistakes sometimes. ICE is going to be too rough with somebody, or, they're dealing with rough people. They're going to make a mistake. Sometimes it can happen.
Now, New Zealand Prime Minister Christopher Luxon has called a national election for November 7th. He says that the early call is about giving voters certainty as he aims to win a second term with a promise of faster economic growth. Now, Luxon's National Party has slipped in recent opinion polls to be neck and neck with the Labour opposition.
The recovery is up and running in a way, and we think there's a marvellous opportunity for us to help this country realise its potential. We're going to demonstrate more of that through the year. There's a lot more activity and job vacancies being promoted. So the last thing for sure is that we want to see unemployment coming down, and we expect that to happen during the course of the year.
In terms of movers here today, we're watching gold stocks very closely and continues to be an up arrow story when it comes to some of the miners here today. So the likes of Shandong Gold up some 4%. Gold, prices continue to kind of edge higher here in the face of all these geopolitical concerns and the like. We flip the boards and we watch what the leisure wear, that sports makers are doing in China. ANTA seems to have led to a bit more concern about what the outlook looks like. Right? When you take a look at fourth quarter retail sales, they did report some low single-digit decline when it comes to retail sales. The stock right now is at the lowest we've seen in about 8 to 9 months there. So we're down about 6%. That's sending some of these other apparel makers lower. Leaning also is down by 3% as well. Wanka also. Some news there.
Yeah, so Vanka is also, let's bring it up, please, if we can, and maybe just also a note here on ANTA that was a filing to the exchange, of course, yesterday. Now, as far as Vanka is concerned, good news. You look at H&A shares also reacting quite positively. Approval here for this revised plan to extend. I guess in some ways a positive development to kicking the can down the road there. 2% up on both, 2 to 3% rather, to be more specific on the A-share market specifically. Hang Seng Index, we are just entering the last hour of the morning session and the benchmark is looking like this. We've been bobbing between in a very, very tight range. Dollar chart on the bottom of your screens, 0.25% to the downsides. That's it from us here today. We'll see you all tomorrow.